Ladies and gentlemen, welcome to this CGAP webinar, Spotlight on Regulators, Open Banking and Financial Inclusion. I am delighted to see so many regulators and also CGAP partners joining this, this session on regulatory issues in open banking. And I know it's a time with webinar fatigue, so it's great that many of you were still able to join and are interested in this topic. If you could go to the next slide. So this is just a brief overview of the agenda for today. We will discuss, we will do some introductions, about 15 minutes, and then the main part of today will be a moderated discussion where we will discuss with our three panelists and will allow for Q&A throughout. I will share some more details in a minute. So my name is Stefan Staschen. I'm a senior financial sector specialist at CGAP, and I have been leading our work on open banking and how to design it for financial inclusion for CGAP. I'm joined by my colleague Ariadne Plaitakis, and both of us will be the hosts of the webinar today. Open banking is a topic much talked about these days. And today's webinar is not really about presenting what work CGAP has done in this area, but it's about hearing from some of our colleagues from the regulatory authorities who have been personally involved and in the middle of implementing open banking, and I'm very excited about that. We have one central bank that is in the middle of implementing open banking, and that's Brazil. We have one that is designing a new open banking regime. That's from South Africa. And we have a third panelist from Basel, from the Basel Committee on Banking Supervision, which brings the global perspective. So I'm very excited about our three panelists joining us today. And let me briefly introduce each of them in the order they will speak. We have Diogo Silva, who is the head of division in the Financial System Regulation Department at the Central Bank of Brazil. So he has worked there for more than 14 years and has been looking at market trends and innovative regulatory approaches. But what is most important for today, for the past year, past year and a half, he has been a very busy man because he has been implementing and leading the team responsible for proposing and implementing the open banking regulatory strategy in Brazil. And he has also been responsible at the central bank for the open banking committee for leading discussions about the implementation of open banking. Our second panelist is Comfort Pilani. He is a fintech specialist at the South African Reserve Bank. Comfort has nearly 10 years of experience working on projects to promote digital financial inclusion across Africa. At the moment, at the central bank, he leads the innovation accelerator in the Intergovernmental Fintech Working Group, Innovation Hub. That's a long word, and we will explain later what exactly that means. In the accelerator, Comfort is particularly responsible for initiatives around open banking and open finance. Prior to joining the central bank, Comfort was a manager at Genesis Analytics and also worked for the Center for Financial Regulation and Inclusion, CENFRI, in South Africa. Last but not least, we have Douglas Araujo, who is a member of the Secretariat, Basel Committee on Banking Supervision. So this is the standard setting body for banking supervision. Douglas serves as the Secretariat of the Basel Consultative Group within the BCBS, which is the outreach arm of the Basel Committee responsible for deepening the Basel Committee's engagement with banking supervisors around the world in emerging developing economies and elsewhere. And for them, financial inclusion issues are very important. He's also a co-secretariat of the Financial Technology Expert Group and is actively involved in the committee's work on monitoring the impact of COVID-19 on the global banking system. Before joining BCBS, he was at the Central Bank of Brazil. So I'm truly pleased to have this excellent panel joining us today. And I would like to ask our CEO at CGAP, Greta Bull, to share her opening remarks to the webinar. Greta, over to you.
Thanks so much, Stefan, and good morning, afternoon, and evening to all of you, wherever you are. I'm thrilled to be joining you for this webinar on open banking and financial inclusion. I think it's going to be a very rich discussion. I'd like to start by thanking all of our speakers for joining us today, as well as the many people who are dialing in. It looks like we have a very good turnout for this discussion, so we're really pleased to have you all here. This webinar was inspired by a recent publication that CGAP put out called Open Banking, How to Design for Financial Inclusion. And you can find that document on our website at cgap.org. With the term open banking, we mean the customer permission sharing of consumer data between banks and other financial services providers, for example, data holders, and third parties such as fintechs, who we would call data users. Many countries, not only in advanced economies, but increasingly also in emerging markets, are looking at open banking as a way to promote innovation through the better use of existing data pools. Opening up data will, in theory, increase the competition and advance financial inclusion by making it easier for providers to overcome information asymmetries that are typical with low-income customers. In this paper, we started from a customer needs approach, identifying the pain points of low-income customers in emerging markets. And then we identified what types of open banking enabled products could meet those needs, ascertaining what the potential of open banking was for financial inclusion, which is of course CGAP's main area of interest. We also undertook a landscaping survey of 12 open banking regimes worldwide, from which we identified 12 design components that policymakers need to consider when developing a framework for an open banking regime. By plotting these components back to the open banking use cases we identified, 5 of these components stood out as critical to expanding financial services for poor people. These included who's required to share data and who can access the data. Second, what types of data are shared. Third, what industries are covered? In other words, is it banking only, or are you including utilities, telecoms, et cetera? Fourth, whether payment initiation is enabled within the regime. And then finally, fifth, who bears the cost of the regime. How these questions are addressed by a regulator will have a significant impact on a regime's potential to achieve greater financial inclusion objectives. For example, the greater the number of participants required or permitted to share the data and access them, the greater the diversity of new services that can be enabled, and the more competition that could result. Similarly, the greater the breadth in the types of eligible data and the more likely that products relevant for low-income individuals can be developed. After all, the unbanked and the underbanked have very little banking data to share, so tapping into wider data pools such as mobile money transaction data, but also alternative data like utility payments and GSM data would expand the potential of open banking considerably for these populations. This is what we at CGAP call open banking schemes based on financial inclusion by design. As part of our research, we've been engaging with regulators in emerging markets who either have implemented open banking or are in the process of doing so. We've tested these assumptions with them and have provided inputs into their consultation processes as well. Today's webinar is the fruit of some of those engagements, and that's why I'm so excited to have with us today regulators from Brazil and South Africa, as well as a representative from the Basel Committee on Banking Supervision, which has also taken considerable research on open banking. We hope that this guided discussion will provide us with some further insights on the importance of financial inclusion in the development of open banking frameworks. So once again, I thank you for your participation, and without further ado, I hand over to Stefan and Ariadne and their excellent panel. Thanks for joining us.
Thanks a lot, Greta, for putting this into perspective and sharing some of the work we have been doing on open banking. Before I hand over to my colleague Ariadne to lead us through the initial round of questions, let me do a couple of logistics. So this is a video broadcast, and I think many of you are familiar with that by now. So attendees' microphones are muted throughout the webinar. But we would encourage you to use the chat function at any time. You'll find the chat box on the right side of your screen, and we will keep track of any questions or comments you put into the chat. And the idea is that we don't have a dedicated Q&A session at the end, but that we actually look at your questions throughout this discussion and post some of them to the panelists. So if you do so, if you send questions, please be sure to send them to all panelists and attendees. The webinar will be recorded, and you will receive a link to the event recording after, and also to our presentation by email after, in the next couple of days. So that's the logistics. I think they're straightforward. Let me hand over to Ariadne to lead us through the first round of questions to our panelists. Thank you.
Thank you very much, Stefan. And I'm very excited also to be on this webinar. And I want to say thank you, first of all, to our panelists. Before I start, thank you, Diogo, Comfort, and Douglas, for which I hope will be an entertaining and informative discussion. So this is the way we're going to do the conversation today. I'm going to start with an overall question that each of our panelists is going to respond to. And they will be using some slides. So they'll have about 5 minutes each to present. And then we've chosen some topics, specific topics about open banking that we're going to go into further depth. And for everyone on the questions, we're going to try to treat the questions as they come up within the topic. So for example, after I do the 5 minutes presentations, we're going to look into the questions relating to those. And then when we go to the individual topics, we'll look into those. So we're trying to keep it an engaging flow, not just with the panelists, but everyone who's also attending the webinar. So I hope we can get an exciting discussion going. So to kick off, I would like to know, where exactly do you stand in each of your countries or in your institutions with open banking? And I'd like to start first with Diogo. Where does Brazil stand on the open banking journey? And what role does the social goal of financial inclusion play in Brazil's open banking strategy? And has it influenced in any way the way you have implemented open banking?
Thank you, Ariadne. It's an honor being here and being able to share our experience of regulating open banking with other regulators. I brought a slide to help me guide through these questions. Yeah, the next one, please. So yeah, it has been a long journey. We have still a long way to go, and it actually does not stop on phase 4, even though that's actually improvement over other open banking models that are already implemented in other jurisdictions. Either way, anyway, we have started discussions of open banking in 2018. When actually the UK through the OBIE started implementation of open banking there on that jurisdiction. And we actually also talked with other regulators throughout the world, like the ones in the East Asia region, in particular Singapore and Hong Kong. And ultimately, we were on the verge of approving our data protection regime in Brazil. So that gave us a boost for our project. And then in 2019, we actually issued a communique where we laid down the principles and the basis for open banking Brazil. Then we started discussions with our industry, saw some movements, some initiatives, even though they were mostly based on bilateral contracts. And then we did a public consultation. We ultimately issued the final regulation that laid out the general rules for the ecosystem. We then started discussions on the governance structure that's key for the environment of the ecosystem. And then we, when everything was already set, a private backed governance structure, they proposed to us the technical standards for phase 1. The Central Bank of Brazil approved it, put that on regulation. They implemented the phase 1 of open banking last February. Yesterday, they presented to us the technical standards for phase 2. Phase 1 was mostly open data, so information about the products, characteristics of the products for all the financial institutions. Phase 2, they started to deal with consumer data, so transactional and registration data from consumers based on credit and account products. Phase 3, we go to services. Everything will happen this year, so it's a very tight schedule. Services, we talk about payment initiation service and also the forwarding of loan proposals. And by the end of the year, we will have phase 4, that's open finance. We will move to a model that also involves data from insurance products, investment products, foreign exchange. And this is what some jurisdictions are calling open finance. So yeah, we are having these discussions with the industry to implement the phase 2 of open banking by July, and already start discussions for phase 3. As we are doing this after other jurisdictions initiated in this movement, like the UK were the trailblazers here. There were some shortcuts that enabled us to maintain this schedule that's, as I mentioned, very tight. But we are confident that we will be able to implement everything by the end of this year. And by the end of the year, we might actually think about moving to other economic sectors. But for now, we are solely concentrating on the financial sector. But moving on to the next question, I'm very passionate about this subject, so I'll try to do everything in 5 minutes. Sorry if I go a minute or two over that. But financial, that's actually a very good question, because when we talk about open banking, we mostly talk about how it will improve competition on financial markets. But we tend to forget that the basis of the model is that the consumer owns their data. So it's financial institutions must have models that are consumer-centric. And consumer is now in control of their financial life, financial. So we think that open banking might improve financial health. So it's not only about them having access to financial products, but having access to products that are suitable to their needs, to their objectives. So that's why we also talk about financial inclusion being one of the objectives of open banking Brazil. Here we say financial citizenship because it's much more than just providing access to consumers to their to financial products. So it must happen in a frictionless manner and in a way that the product is suitable to what the consumer intends to have. So that's one of the main objectives in Brazil. We believe that SMEs will be the first ones to actually reap benefits from our open banking mechanisms, ecosystem, mostly on phase 1, when we deal with improving comparison between products that exist on the market. But moving on to other phases, like Greta mentioned, legal persons or that don't have past credit history, but have other relationships with financial institutions would be able to share those particular data. And in this way, the financial institutions would be able to provide best services to them. So yeah, I guess I have talked a lot, so I'll let others speak a bit about their experience, but I try to use the 5 minutes as best as possible. Thank you, Ariadne.
Thank you, that's great, Diogo. Don't worry, I'll get back to you. I have a feeling you have more to say on the subject matter, so we're not going to let it there. But thank you also for letting some our other clients join the discussion. So Comfort, In addition to the question about where South Africa stands in the open banking journey, I want to ask you what is expected for open banking in South Africa? And what is the role of the South African regulatory authorities, those that are part of the IFWG, in fostering both competition and financial inclusion?
Well, thanks, Ariadne, and thanks to everyone. I do have a presentation. Hopefully you can just flash it up. Thanks for that. Next slide, please. Great, so I'll chat to the first question in this pack and then maybe reflect on the other questions afterwards. But so essentially the Intergovernmental Fintech Working Group was established in 2016 and consists of 7 regulatory and policy-making bodies. That includes the National Treasury, the National Credit Regulator, Financial Intelligence Center, South African Reserve Bank, the Financial Sector Conduct Authority, as well as the Competition Commission. And the goal here was to really enable us as regulators and policymakers to understand, regulate, and foster fintech, especially given its complexity as well as its cross-cutting nature. So the real objective here was really to ensure that we continue, or enable and continue the efficient functioning of financial markets, financial stability, and consumer protection. And this is really enabled through the Innovation Hub, which we launched last year in April, and it's 3 units, which the first being the Regulatory Guidance Unit that really provides non-binding regulatory steers to innovators that are looking to unpack some regulatory issues that they're unclear about. We also have the Regulatory Sandbox, that's really a controlled environment for innovators to test innovations that then also give us a sense of areas of regulation that we might need to ease or potentially explore in terms of introducing. And the last is the Innovation Accelerator, which we look at as a space for us to really push the needle further in terms of fintech, either by testing new technologies or exploring or in building our understanding of various topics that helps us then develop regulatory positions. And this is where open banking particularly falls in this Innovation Accelerator. So various regulators have been working on open banking, but we have not necessarily created or at least developed a common position across the IFWG. So I've highlighted here 3 regulators. Firstly, the National Payment System Department, which did publish a consultation paper on screen scraping, APIs, and open banking. We also have the Financial Sector Conduct Authority that published a research paper on regulating open finance that's also gone out for consultation. We also have the Competition Commission that published the Competition in Digital Economy that really encourages open banking and highlights the need for regulation in this space. So as you can see, there's been quite significant progress made respectively, but I think we all recognize the need for dialogue to ensure that there is alignment and also avoid any material conflicting policy stances. And obviously, we do get instances where the industry asks for, what is the South African regulator's position on open banking? That really then, suggests the need for us to align as regulators and converge on some of these key policy areas. Next slide, please. So we established the OPI Working Group, or the Open Banking Integration Working Group, late last year as a collective of nearly 10 regulators, including the Prudential Authority, National Credit Regulator, the Conduct Authority, the Payment Systems Department, etc. And the aim is to really consolidate the views and share information on activities from the various actors to collaborate on further shaping these positions. So this is really getting into the how of open banking regulation and sense-making as regulators. So it's not to duplicate the work that's been done already, but rather to supplement, add on, and really build on and leverage that work. And the working group is not here to supersede the regulatory authorities of those members, because the aim at the end is that those regulators would ultimately implement the recommendations that emerge from that work. So the scope of work is still very much in progress and will depend largely on us aligning as a collective on the policy objectives, the areas of overlap in current efforts, as well as the gaps in existing positions. And I mean, the topics are broad, as Greta mentioned in some of the design components, looking at what regime you look to implement, issues around consent, consumer education, dispute mechanisms, data protection, etc. And all of these will be ironed out as we discuss and collaborate as regulators. So that's pretty much where we stand. I think the second question was around what we expect from open banking. So we are still articulating the policy rationale, but some of the themes that are emerging for us from the discussions is that open banking does create the opportunity to increase the depth and the breadth of financial inclusion. So I mentioned depth here because one of the challenges we face in South Africa is a highly banked population, so arguably included, but cash is still dominant. About 70% of accounts are either dominant, mailbox accounts where money is withdrawn as soon as it comes in, or accounts that are used less than 3 times in a month. So then you look at other product types, and the suite of products that are used by South Africans is quite limited to products like unsecured personal credit, funeral cover for insurance, and we also have a low savings rate in the country. So we expect open banking to foster innovation in new products and services that are then better tailored for consumer needs, which is, I think, a theme that's been mentioned a number of times already in this call. We also expect that open banking could solve for the competition in an industry that's traditionally been dominated by your larger incumbents, such as banks. So how this plays out obviously depends on the mentality that is adopted by the various players. For example, instead of it being a competitive rivalry, we could see what they term as co-opetition, right? Which is cooperation in competition between banks and third-party providers who then share the goal, which is to give the best value for money for customers. And then I'm just aware of time, but if I can reflect on your last question around the role of SA regulators around fostering competition and inclusion, there are 2 key regulators and policymakers that are responsible for fostering competition and financial inclusion in South Africa, which are the Competition Commission and the National Treasury. The Competition Commission is a statutory body empowered to investigate, control, and evaluate restrictive business practices, abuse of dominant positions, and mergers in order to achieve equity and efficiency in the South African economy. So they are really critical in helping us ensure that there is a fair playing field and that incumbents do not abuse their market dominance to throttle open banking efforts. And then lastly, the National Treasury, on the other hand, is the financial sector policymaker in South Africa, and therefore is responsible for setting the policy agenda for financial inclusion in South Africa. So recently, the National Treasury published the Draft Financial Inclusion Policy, which then establishes a framework for financial inclusion, sketches the approach to implementing the policy, and provides a basis on which the financial services sector, regulators, and all relevant stakeholders will promote and support financial inclusion. So that was quite a mouthful, but I hope I addressed some of the questions that you posed. Thank you.
Oh, great. Thank you very much, Comfort. So, Douglas, similar but not exactly the same, because obviously you are not representing a country, you're representing an institution. And so my questions for you are, what is the interest of the BCBS in open banking? What do you think is the potential of open banking? And what objectives can a regulator pursue with open banking? And lastly, in emerging markets, how useful is it? And does it actually have a possible role in financial inclusion?
Okay, thank you very much, Ariadne. And actually, before I start answering, let me just say how honored and humbled I am to be here with you, with Stefan, after hearing Greta, and also Diogo, Comfort, the other panelists as well. So thank you all. Also Danielle and Denise in the CGAP. And of course, all attendees for joining in. And I can see a very active chat discussion going on already. So that very much looking forward to your questions as well. So to your questions, Ariadne. So first of all, let me begin by what the primary kind of angle that the Basel Committee is looking at open banking is. The Basel Committee is a primary global standard setter for the prudential regulation and supervision of banks. So as you can imagine, this is the angle that we're looking at open banking, which is what challenges, what prudential issues does it bring to banks, and what are the implications that open banking might have on the processes of banking supervision. So that is the approach of the Basel Committee, to try to understand it better, to discuss this, and to share this among its membership. And in fact, the Basel Committee has already conducted work in this arena. So Danielle, if you could please move on to the next slide. I can promise you it's just this one slide, just bringing out some of the main points of a report that we published recently. And I mean, recently, it was right before the pandemic, so I guess time sort of stopped then, I can claim. So this was November 2019, a report published by the Basel Committee after taking stock of what its jurisdictions were working on, open banking, and also what are the key findings both for banks and for supervisors in those jurisdictions. What are the implications, some of the challenges there. And the main message here, and this is what I want to drive home, is that open banking, of course, it has enormous potential, as we just heard. Comfort lining out many of those, and also Diogo as well. So there's incredible potential to drive efficiency gains in banking systems and financial systems more generally. It can also help a lot with financial inclusion, and of course, it can be a stepping stone as well to more open systems, so open finance in general, and also more broadly open data in the future. But it also does require some vigilance, some scrutiny from banks themselves and also for supervisors. And the reasons are that open banking has the potential to fundamentally change banks' business models. It has the potential to, it increases the points of contact between banks and other institutions. And what's in the middle of those points of contact are consumer data, consumer financial data, that's very sensitive information. And in addition to this, there is a number of things that that could go wrong in the middle, and that for which banks and also the third parties like financial aggregators and other, let's say, data users, that they also must have an adequate risk management to address this those issues. So so the Basel Committee perspective on this is to take stock and to understand what are exactly the implications that open banking might bring, and the challenges, and how can we best let banks and jurisdictions harness the benefits that open banking is bringing already to some jurisdictions, and is likely to bring in other ones that are in the process of implementing it, without itself jeopardizing the health and the efficiency of the financial system and the safety of the financial system. Because ultimately, this is too big a thing to compromise. So it's important that this innovation be well understood, be well studied, and also that supervisors and banks themselves are keeping abreast of what type of risks does open banking bring to their own institutions and of course to their business models. Yeah, so this is the main focus. And about the potential of open banking, I wouldn't add too much of what has already been said, except to say that to highlight that this open banking, the way it's being set up and the way it's happening, it's if you think about it, it's sort of overcoming this huge fixed cost of addressing this information asymmetry. And once this is done, as I said, it can serve as a stepping stone to open up other parts of consumer or citizens' financial data that can help achieve gains in scope. So, for example, what I mean by this is once a jurisdiction has a complete open banking framework in place, it is the bar is lower for it to consider implementing also other forms of open finance, like going into insurance, etc., and other areas that are that can also bring incredible potential benefit to consumers. Now, so this is another potential I would add on top of what has already been said. Now, regardless of where a jurisdiction wants to achieve ultimately, so only open banking or go beyond that, or even the format that this open banking is implemented in, as is outlined in this report, you can see there, and also in the CGAP stock take, the landscaping, there's various ways that the jurisdictions are implementing open banking in practice. One objective that I would say here that regulators should keep in mind is precisely this one of harnessing the positive potential of this innovation, while simultaneously trying to understand what are the risks and challenges and how those can be addressed. So this is crucial in order for supervisors, regulators to stay ahead of the curve and and promote innovation, but in a safe way. And lastly, to your question about how open banking and how related innovations can get useful to emerging markets and developing economies in particular. Here, of course, there's the whole issue of reducing information asymmetries, of enabling the use of other information, especially for those customers that are perhaps they are already banked but underserved. So they might benefit particularly from this first wave of open banking. But more generally, if it's done in a safe and sound way, it should promote, in the end, ultimately, a more effective and more lean financial system in the sense that the credit, the capital is allocated more adequately where it should be from an economic perspective. So this should ultimately help those jurisdictions achieve an ultimate goal of having more sustainable growth, and while at the same time those institutions more active in promoting financial inclusions are also themselves safe and sound and robust from a prudential perspective. Yeah, so that will be it for me. Those questions.
Thank you very much, Douglas, for the banking supervisory perspective. I'm just going to hand off to Stefan, who's been fielding the questions in the chat.
Thanks, Ariadne. So I have been trying to keep up with the chat. Thanks for being very active on that. And I will take the liberty of choosing a few and leaving others for later, because some of the things I think will come up. There was one about competition, and I think both Diogo and Comfort already touched on that, and Douglas as well. There was one on international standards for cross-border. That's a question we want to cover later, and on API standardization. And I believe also for the panelists, when we go for the next questions, something to keep in mind. We get to the challenges in a minute. So there was a question about how to implement in practice and any challenges to that, and what kind of resistance there is from incumbent banks. So let me pose one here, and that is about the resources available by regulators to actually implement. So it would be very interesting. It goes to Diogo from Brazil. So what resources should regulators have in place if they want to implement open banking, and how is it funded? Diogo, maybe you can share the Brazilian experience with that.
Yeah, thank you for the question. So we had to empower our IT department. So it's not only the financial regulators that are actually dealing with open banking issues in the Central Bank of Brazil. So our IT department, our supervision department are on board. They are helping us on this project. But I guess the governance structure that we envisage in Brazil allows for minimum costs for the regulators, and the costs actually being shared among the industry. In Brazil, we have determined that the governance structure is private backed, but every participating institution would have to contribute on their budget. But the amount they would actually contribute would be proportional to the size of the institution. So that's what we actually pursued in order to allow for a model, considering that the Central Bank of Brazil has limited resources. And we also have had the help of the British consulate in Brazil, so they actually have helped us with workshops with specialists from the UK. So I guess training the manpower of your institution or of your central bank will be key, because everything will be different. Even the supervision of this ecosystem will be different than what the supervision usually does in terms of supervising financial institutions. So I guess training your human resources will be key for the process. And here we have had the help of the British consulate in Brazil. And I guess I'll be able to talk more about the governance in later questions.
Yes. Our next topic, I think we've finished the questions relating to the opening session, is really about challenges. And Diogo, what have been the greatest challenges that you've had in designing and implementing the open banking regime in Brazil? Are there any technological or technical aspects in particular that you found difficult to deal with, or has it been more governance or business or commercial aspects?
Definitely not the technical standards. They are mostly universal. So we are looking at the experience from other regulators. So setting that HTTPS, JSON, RESTful, ISO 20022 are what the basis for the APIs were conversations that they didn't take long to endure. I guess the main challenges are really related to the governance structure. In Brazil, we have said that it would actually be as much as democratic as possible. So one of the principles that we have set on regulation, that the governance structure would ensure the representative and plurality of participating institutions. So we actually designed a governance structure where the deliberative council would have 7 seats, 6 representing the participating institutions throughout their associations, and 1 independent member that would be elected by the other 6 seats. And for that, we actually had to make an election with the licensed institutions by the Central Bank of Brazil. That's actually something that I never thought I would actually have to do in the Central Bank of Brazil, running an election, but it was an interesting experience. And we also said that the 6 seats would represent incumbents, mid-sized level institutions, and challengers, fintechs. Each seat would have the same power. So what we are saying, that association that represent incumbents has as much saying as association that represent credit fintechs. So it was a difficult discussion, but we actually had the help of our board of directors, and we were able to do that. But it was something that took some sleepless nights from my life. So it's something that I believe is key, because we are talking here about improving competition. But it was something that required much negotiation with all involved parties. Other aspect is setting out the scope of data, because even though I mentioned that we have a general data protection regime here in Brazil, sometimes we still have discussions if a particular set of data is owned by the consumer, or it's not actually a raw data that's owned by the financial institution. So we have had some difficult discussions, but we have gone through that, and I believe that we have managed to strike the perfect balance on setting those set of scope of data, even though we are still on the verge of discussing the phase 3 and phase 4 of open banking. But for now, I guess we have managed to survive and do a good work on that.
Diogo, I don't know if you just saw, but we've just put up the governance slide. I know we were going to talk about it later, but since you mentioned it, I don't know if you want to finish up.
Yeah, sure. So it's based on 3 layers. So there's a deliberative council, as I mentioned, with 7 seats, a secretariat, administrative layer, and the technical groups for phase 1, phase 2. There were 7 groups. We are now discussing if we will expand or reduce some of those groups for the phase 3 of open banking. And as we know, there are discussions that involve more than 1 group. We have those architects that are a group of 5 people that oversee the whole project. The Central Bank of Brazil participate on discussions as observer. But we try to, as in the end, the propositions they make will be part of our regulation. When we participate on discussions, we try to present them our views of what they are actually discussing. In some instances, we actually had to intervene because what they were actually discussing was not the ideal solution in terms of financial stability or even the other principles that the open banking system is based on, like improving competition. So that's for that. We do have on the other slide I mentioned, hopefully it will be shared with the general public. I put hyperlinks to the regulation and also to the GitHub where the technical standards for phase 1 are actually concentrated now. So yeah, that's actually the key point for the the open banking infrastructure. And they besides proposing the technical standards, they are also responsible for implementing. So in this governance structure, they also have a part that are related to the infrastructure. So the participants directory, also a service desk that serves for all the involved parties, where they receive claims and complaints from other participating institutions and also from the general public. And the website, the open banking website that presents the technical standards, but also some key information for the public about what it is open banking, the potential benefits, and also events concerning open banking implementation.
Thank you, Diogo. And yes, the presentation with the links will be shared to our audience. So they should be able to access all the website and the materials that you've just referenced. Comfort, what has your experience been with addressing open banking as one among several initiatives for the Innovation Accelerator? And do you have any lessons to share for how to effectively collaborate with other regulators?
Yeah, sure. So I think internally as the Innovation Hub team, from a capacity perspective, we didn't necessarily face a challenge in terms of onboarding open banking as a priority for us to look after. So we do have a team of specialists and we do divide the various initiatives, currently 8 running under the accelerator amongst us. So it was quite intuitive for me to lead on the work. I think the challenge was, unlike most of the initiatives we currently have, open banking was quite unique in the sense that you already had existing efforts and outputs that were produced by some of the IFWG members. And the previous one started pretty much from scratch. So it was a little bit easier to bring everyone on the same page in that sense. So in the open banking case, however, we had to spend quite a lot of time dialoguing and negotiating with the different regulators to agree on the benefits of journeying along together. So in the end, I think we came to the same conclusion that we will derive more value by coming together. So now it's really around fleshing out that program of work together. So when one looks at some of the lessons that we've learned, I think one important lesson has been the need to involve the regulators and policymakers that will actually be responsible for actioning those recommendations quite early on in the process. and ensuring that they are involved throughout the journey. So if you don't do that, you do run the risk of facing delays in the process as you start onboarding, various stakeholders along that journey. We've also learned that the value proposition of joint policy making and joint sense making has to be clear and well understood by all the parties involved in order to avoid walking at different paces. So, I mean, some of the risks is what we communicate to the market if we walk at different paces and produce different outputs that might not necessarily align from a policy perspective. So this is something that you might need to reinforce quite frequently, as some old ways of working, for example, operating in a siloed way might potentially creep up. Another lesson that we've learned was on the need to be agile. And I think this is quite a cliche in our space, but I think that's quite an important approach you need to adopt, and dividing the work into smaller sprints or bite-sized chunks versus doing all the work and only at a later stage, once you have a policy or recommendation, then getting inputs from the broader membership. So I think the key theme here, as we're very much in our early days, has been the number of dialogues we've just had to have to bring everyone onto the same page and make sure that we don't diverge in the work that we're doing, and really leverage the overlaps that we have in the current work that exists, but also then pursue the work together. But that's at a high level some of the reflections I have on that.
Thanks a lot, Comfort. Very interesting to hear about the involvement of various regulators in South Africa. I have a question here for Douglas, where I thought you might be able to shed some light on, and that is on the supervision side. And the question is about what are the specificities of supervision and whether you could elaborate on that. So obviously, regulation is one thing, but how to supervise the third parties and the scheme more broadly is another question. And I was wondering whether you have some views on that.
Yes, Stefan, thank you very much. And also thank you for the attendee who posed that question. So some elements, for example, of supervising banks that are operating under open banking environment. It might include, for example, what are their internal processes for ensuring that, first of all, that they're structured, let's say, be it an API, for example, that it's in place and that it's properly managed, that the data shared only with the third-party operators, the data users that are actually authenticated to get access to this data, and of course, even this is the bar is even higher if the operator would have permission to initiate payments, of course. Other supervision of other topics, like for example, contractual arrangements. What are the processes that the bank has in place to ensure that in case a jurisdiction requires contractual arrangements between the bank and the operator, what process that the banks have in place to ensure that that those operators are actually fulfilling their contractual obligations, they're not going beyond, for example, in situations where there might be, for example, a need for a bank to cut off access. Does the bank has the power to do this? So those are some of the questions that occurs to me specifically with respect to supervising banks in an open banking environment. And of course, this in practice, they will be very much aligned to how open banking is implemented in that jurisdiction. But in essence, the question here is, can banks appropriately manage the risks that come from an open banking with respect to not only any financial loss that may be attributable to the bank, reputational risk, and also more broadly, banks supervising banks in an open banking jurisdiction might also mean that the supervisor will have to ask the bank the question: how are you adjusting your business model to account now for this changed competition landscape? So this is also another plausible question that supervisors might ask banks. For example, it might require banks to answer. But in essence, in very high level terms, as a supervisor in a jurisdiction that is going through this change or that has already open banking initiatives in place. One important thing is to ensure that that banks that they are able to not only cope with open banking, but also that their business models continue to be sustainable, their risk management processes, their internal controls processes continue to be robust, even though now they have other points of contact with their clients. And I hope to have answered the question, but please let me know if there are any follow-ups.
Thanks a lot, Douglas. Let me hand over back to Ariadne to go to the next topic.
Yes, thank you. So the next topic is about data protection. I mean, in the paper that CGAP put out, we had identified these 12 design elements, and one of the ones that we had honed in is about the importance of data protection, about ensuring that consumers' data is protected, not just, and that they don't be exploited. And so I'd like to actually look at this from a reality perspective. I'd like to start first with Diogo. Did you have to adapt your open banking regime or your data protection laws for those to work together?
As I have mentioned, while we were discussing open banking, our National Congress was on the verge of approving our general data protection regime. That's pretty much similar to what they have in Europe, the GDPR. It's actually important for open banking because it changes the dynamic of things, like determining that the consumer owns their personal data, and also set limits concerning the data recipient, because open banking only deals with the data sharing process. It does not go over things that, like, the data recipient will actually pursue that we will actually eliminate the data after that period of consent was over. We will anonymize that particular set of data. So things like that are actually to be assessed based on the law, the data protection regime. Either way, I believe there are other things that are key for open banking, like ensuring that the financial institutions or participating institutions have in place a cybersecurity policy. That was also something that in Brazil we had already implemented. For open banking to exist, I believe some prior actions were actually necessary. The cybersecurity policy, I believe it's the most important one. But I believe that the having a solid data protection regime that sets that the consumer is the de facto owner of the particular set of data is very much important, or you will spend lots of time discussing with the industry this principle in Brazil. Having the law in place actually helped us moving on the needle and even expanding the data for open finance movement when we are talking about our phase 4. So we did not propose that amendment to our legislation, but in the end it benefited our project. So it was the ideal solution. So that's what I would have to say. But a thing to consider is that in Brazil, we already had a regulation on data portability ever since 2006. But there we were not talking about a standardized manner to allow for that data sharing. So it's just to show that it's also possible to have an open banking regime without an updated data protection regime. But as I mentioned, the ideal solution is to have both in place. And in Brazil, the authority that will supervise this law is a new one that's being created. And we will have talks with them to move the both both regulation and legislation in the same manner, with the same objectives in mind. But that's something that we are already assessing, and we tend to have these talks with other regulators, and the one that will actually oversee the data protection regime is top of the list.
Thank you. So it seems that Brazil seems to have all its ducks in the row from a data protection perspective, but I'm sure, Douglas, you must agree that there are some other countries that, if we're thinking about emerging markets, where they may not have a data protection law, or they may have scant protection, scant sectoral protection. Could you speak to me? What do you do in that case?
Yeah, thank you, Ariadne. It's a very interesting question. So let me just first build up from the report, the stock take that we conducted. And actually, one thing we noticed is that while a number of committee member jurisdictions do have in place data protection frameworks, they were not all necessarily like the consumer owned data type of framework. And some of them, actually the bank or even the third party, so the data user owns the data, even though in those cases they would always need to some form of consent to use it or to share it more widely. Yeah, but in any case, the question of what to do when a data protection framework is not in place is a very practical and interesting one. So let me share you some of my own thoughts. There are in the process of open banking, there are several ways, of course, that data can be lost or misused intentionally or unintentionally, and therefore there is a potential for financial loss or for reputational loss, and it will be attributed somewhere with the legal framework in place or not. So the absence of data protection framework is, in my view, not an excuse for a lax risk management process by banks, and also, of course, by data users themselves, by the third parties that use the open banking data. And actually, I would say quite the contrary. In those cases where data protection framework is not present or is scant, as you said, I think it makes an even stronger case for institutions, both on the data provider side and on the data user side, to demonstrate to authorities, be them the banking supervisors or other authorities or included in this overall governance, that they do have appropriate processes and frameworks in place to ensure that whoever owns the data ultimately, it would not matter for the sake of data protection and cyber resilience. And so this will be my comment with respect to jurisdictions that do not currently have a data protection framework in place. I agree with Diogo. You can, this is not an excuse. A jurisdiction, if they want, they can still, of course, try and start building up their open banking framework if they so wish. Yeah, but my remark would be that in those cases, they would need to pay an extra caution with respect to how banks and also the third-party users, they're using this data and protecting this data from consumers. I mean, it doesn't matter which jurisdiction, no one likes to have their data misused. And I guess especially for financial inclusion customers that are either underbanked or even unbanked that are only now beginning to have exposure to financial services, perhaps having the feeling that their data was misused would breach a trust that could potentially harm their relationship to financial services permanently. So I think that in those jurisdictions, it's even more important for supervisors and other authorities to ensure that their institutions, they are rising up to the challenge of dealing with a flow of data between their institutions.
Ariadne, I'd like to add a thing that's actually worth to note. If you take into account, for example, the experience in Australia, we see that the financial sector is already overly regulated sometimes. So that's why we start this process of standardize how data is sharing with the financial sector, because they are already liable to several regulations that try to minimize risks mitigate risks, and also to in Brazil, for example, there is a Data Privacy Act ever since 2001 that financial institutions were liable and could not actually transfer financial data of consumers without their prior consent. So that's why we see the movement of standardizing how data is sharing, starting with the banking sector, because I believe there are already regulation in place that this type of institutions already have to observe, which allow for open banking to exist. And here, our general data protection regime does not cover legal persons, for example, and it did not stop us from putting them inside our open banking regime. So the data set from legal persons might also be shared if they actually consent for that data sharing to occur. So just to add a few more things that I believe were worthwhile.
Thank you, Diogo. Stefan, I think you have some more questions for the panel.
Yeah, it's hard to keep up, but it's great to see all these questions coming in. I think one thing we might want to do is to move on into more like the cross-border elements of open banking, because there were quite a number of questions about that. So there was one for Diogo. I'm trying to find it, which was about, no, I can't find it, but I'm trying to remember. So it was about like international standards and whether it would be possible for whether you are planning as part of your regime to set standards which would actually also allow access to data from other markets, other countries. And I think that's one question for Diogo, more on the practical side, how you think about expanding the regime across borders. And then I can move on to Douglas to ask about, give you some head warning here, to ask about the role of BCBS in setting those international standards, and whether this is a role that you see for the BCBS for cross-border data sharing. So let's start with Diogo. Thank you.
Awesome. No, for now we're just talking about institutions that are licensed by the Central Bank of Brazil. So they have a branch in Brazil, so they have to obtain license in Brazil to operate. So we are not dealing with cross-border transferring of data, but I believe that's something that international data set standards might actually help us in the long run. But as I mentioned, our model has many similarities with the UK model, and I believe other jurisdictions are following the same route. So I believe it would actually help in the future if we go this path of also allowing for data being shared in a cross-border manner. But for now, we are just talking about data being shared inside the borders of Brazil.
Thanks, Douglas. Over to you on the aspect of the role of BCBS in setting global technical standards, which would allow data sharing across borders.
Okay, thank you, Stefan. Yeah, so let's just start by mentioning that I guess a cross-border data sharing is still somewhat some steps ahead of us, so some steps in the future. But of course, it's also our job to try and foresee that in the sort of horizon scanning. And at some point, this is definitely something that will come to the fore and might be especially important for financial inclusion. For example, of those people and communities that they rely, for example, on cross-border working arrangements. And also, this is definitely something that will eventually, become even bigger topic, and will definitely be an applied topic in financial inclusion as well. Now, having said this, what role could BCBS have? We have not discussed establishing cross-border technical standards for cooperation in terms of like how to actually transmit data. Rather, the focus at this moment has been to understand and to try to keep abreast of those developments, and specifically what are the processes that are needed both from banks and also from banking supervisors to address the challenges that they raise. But in the future, of course, as if and when supervisors believe that cross-border data arrangements within this open banking or open finance environment, they do become something that is of benefit to raise up to an international discussion, then the Basel Committee is being the primary forum for exchange of views in global banking supervisory matters. This could be a very good candidate for a topic. And yeah, but having said this, this is I would say that we're still at a stage where more perhaps supervisory action rather than standard setting now is required. And also taking a picture from Diogo's remarks earlier today, that the technical standards themselves, so the APIs and all it, so it's fairly standardized to some point. The question, of course, is that each jurisdiction has their own data protection framework, has their own arrangement, contractual arrangements between data users and open banking. So while it does provide various opportunities both to enhance the resilience and efficiency of the global financial system more generally, it also raises a number of other questions which warrant scrutiny and some thinking.
Thanks a lot,
So,
Douglas.
yeah.
So I can see it's challenging times ahead in terms of global data sharing, and maybe we move back to more comfortable territory on the national level. So there was one question about many financial service providers using broader sets of data, for example, for evaluating customer creditworthiness, and which implicates then other data pools and the use of data pools beyond just banking. And I was wondering, Comfort, whether you have some views on that from the discussions in South Africa, whether there are plans to move beyond just banking data to, for example, telecoms data, energy data, which would be more similar to what we see now happening in Australia, but also in the UK, where they move towards smart data from just open banking.
Yeah, that's a great question. I think the way that we currently look at it as the South African regulators is almost, everything is taken as a step-by-step process, still trying to figure out just the complex nature of setting the standards for open banking or even open finance more broadly. But I think at the back of our minds, we do recognize that, there would be a value in moving beyond just, opening up data in the financial services space, but open data more broadly, like, for example, the examples given in Australia. But as of now, as whether it's a deliberate process for us to say we're going to implement open finance now and then open data to follow, I don't think we've necessarily put that peg in the ground, but I think it's definitely a real consideration that we've spoken of in a number of conversations. So I think it's definitely still in the open, but for us, it's really around, crawl before you can run. And then once you've sort of figured out, your lay of the land as far as setting up the foundations or the frameworks for open banking and open finance, then you can start looking at how to expand it beyond that.
Yeah, that's very interesting. I think it's in line with what we have seen in many markets. You start with open banking and then you move out and you expand from that. We have one more topic which we wanted to cover here on the panel, and let me get to that and then get back to some of the questions in the chat. And that was the question of whether to have a voluntary or mandatory regime. Diogo, I know in Brazil you took the decision to have a mandatory regime, mandatory open banking scheme, at least for certain types of providers, banks. What was the thinking behind that, and what do you think about this discussion, whether it's has to be mandatory from day one in all cases?
Yeah, here we saw that a voluntary model wouldn't work because the incumbent, for example, put some resistance in sharing data with smaller firms, payment institutions, for example. So that was the way to go. We pondered over having a self-regulation model at the start, but we also saw that it wouldn't be possible. The discussions would be endless. So that's why we ultimately decided that S1 and S2 institutions, that the prudential regulation said that the firms that have more than 1% of Brazil's GDP or relevant international presence would be mandatory participants for data sharing, and firms that maintain accounts, hold accounts. Here we are talking about prepaid accounts, and also deposit accounts and saving accounts would be obliged participating on the payment initiation service sharing. So these take into consideration this, and also the third case that's associated with the forwarding of loans that are institutions that have in place a correspondent agreement, a banking correspondent agreement, in order to have that service through electronic means. We have up to 800 institutions participating on the open banking ecosystem. Some only for the payment initiation service, but we are seeing movements of institutions that were not obliged to participate. So here we have the reciprocity principle. If you decide to participate on data sharing, you also have to have in place APIs as data transmitters. You can't be only the data recipient institution. We are already seeing movement from smaller firms to participate in this voluntary basis. So we believe that it's a model that is actually working. We do not see strong opposition from institutions, because with the reciprocity principle, bigger firms would also be able to access data on smaller firms, fintechs, challenger banks, if they decide to participate on the open banking ecosystem. So that was what we said to do, and I believe it's working out fine.
Okay, that's great. Thanks a lot, Diogo. Same question to Comfort on the discussions in South Africa about voluntary versus mandatory regime. Where do you stand in those discussions?
Yeah, so I think we're still very much, again, in early days. I think there are a number of factors to consider, and some of those, Diogo has already mentioned them. So, and also quite earlier in his reflections. And I think one of the key questions is, ultimately, who does data belong to, right? I think this is not an easy question, and we still need to unpack this further. But the answer to that question will then determine what approach you take. I mean, I think, for example, if we agree that the data belongs to the consumer, then that could make the case for making data sharing mandatory, right? But there are also considerations around whether the market will drive it on their own, or we need to actually, enforce it in a way, or at least, strongly encourage it. I think there are currently mixed views around this, where we've seen some banks launch open API marketplaces, for example, whereas others have not necessarily been very vocal on this topic. So I think, like I said, it's still quite early to say, but there are quite a number of factors that we do need to continue having discussions around.
Okay, thank you, Comfort. There was one question for Douglas, and that is on, I think we touched a bit on it before, on the BCB as considering publishing prescription approach on open banking implementation across borders, but the specific question is about the role of the legal entity identifier, and whether that could actually facilitate cross-border data sharing.
Yes, thank you, Stefan. Thank you also for the attendee who posed that question. Yeah, so the legal entity identifier is, of course, is sort of this public good that was shown to be badly needed, of course, some 10, 12 years ago. But now that it's in place, it could definitely be something of help during those open banking cross-border data sharing arrangements. Yeah, but having said that, there are so many other things that would also need to be in place for cross-border data sharing open banking to really enable jurisdictions, and especially consumers and underbanked and unbanked consumers in those jurisdictions, to harness the positive effect. That I would say that it's a feature that it's good to have, and it will definitely help, but it's not the only, I would say, the main precondition.
Thank you, Douglas. I have another question. We haven't really touched about it. People have been talking about the entrance of big tech into banking, payments, and open banking being one way into that. And so in that discussion, there's been a lot of talk about the requirement maybe for data sharing reciprocity. Now, this is a question for anyone who wants to answer. What do we think about that? Do we think it should be an essential part of an open banking regime? Will it help? Maybe, Diogo, I think, Diogo, you probably dealt with this question in your formulations.
Yeah, so here we have said that the institution might have to pursue a license in order to participate on the open banking ecosystem. The reciprocity principle exists. We also have said that transactional data could only be shared if that participating institution actually provides the service related to that transactional data. So, for example, if a firm obtains transaction information from another party, that firm wouldn't be able to share with other party. So that were some measures we actually took in order to control the set of data that would actually be able to be shared, and to not allow that for being shared without the consumer's control, for example. But what we have seen is a movement of some big techs pursuing a license in order to operate in some instances as a payment initiation service provider. So for now, we are closely following what's happening. I know it's something that many international associations are closely following. How will be the landscape of financial service with these big techs participating? But for now, we are actually allowing them to enter, but they would have to abide with all these rules. So the data they own by the consumers would also be subject to being transferred to a financial institution if that particular set of data is actually standardized in order to be shared. So, but either way, we are actually looking at that because I believe it's something that's worrying many regulators throughout the world. But as the data is from pertains to the consumer, I believe it's for now it seems like a good way to go. But we will take a cautious approach and evaluate in the long run.
Great, thank you. Douglas, I wonder if you have any thoughts on this topic.
Yeah, thank you, Ariadne, and thank you, Diogo. It's a very interesting to know how this was developed in Brazil. And yeah, what I would say from this part of the big tech kind of chipping in and you know, getting data from banks while not necessarily sharing data themselves. And it's also a question that just popped up in the chat about it, that I mean, they have much more they have a natural advantage in building a customer's profile, because for them, finance is just one more thing they have data on. And of course, for banks, consumers' finances is everything in some cases. Yeah, so here, what I would say is that, well, the banks, of course, they need to be prepared for the various challenges they will be facing, and specifically global banks, where they might have a more solid position in some jurisdictions, while at the same time seeing their market or their business model being confronted more directly by big techs in other jurisdictions. Another thing, and again, also someone commented in the chat, is that in some cases, the most prominent data holders might be fintechs themselves. So in the comment here, they said about Ant in China specifically, but there are also other cases, like for example, in Kenya or in other jurisdictions, where it's actually the innovators that tend to have, let's say, a bigger treasure trove of data. And how this plays out is also something that it's hard to have a clear answer for, especially one that applies across all jurisdictions, but definitely one that warrants close watch and a lot of thinking and discussions to better understand how banking system will look on the other side, or as Diogo said, how the financial landscape is going to look at after all of this is implemented. I guess one thing that the kind of a general advice or general, let's say, a desirable feature is following Comfort's example that he presented, is that in any case, what is very desirable is if authorities, they are coordinating with each other in jurisdictions. So this is important because it's, I cannot think of any one jurisdiction where one authority holds the pen across all of the sectors that are touched by open banking. And therefore, really having either a formal or informal channel of discussion, and to make sure that the objectives are aligned, that that they want to advance at the same step in lockstep, and especially that they have the same views towards what are the ultimate benefits they want to harness from open banking, and what are also how to best deal with the challenges that come with it. Then I guess this is already halfway to ensuring that open banking implementation will be a successful one.
Thank you, Douglas. And Comfort, I would just like you, maybe if you have a couple of words on this point as well to round up the discussion today.
Yeah, so I think reciprocity obviously is something that I don't think you'll be able to get away from. I think in one of the consultation papers, there is already mention about the need to introduce some form of reciprocity framework, because I think what often comes out in some of the conversations with the banks is what's in it for us, right? Especially if you consider a commercial model where the data sharing is free. So there might be conversations. I think one of the participants talked about, or other participants we've had conversations with before, talked about the need to make it circular in a way, which is as much as the third parties or whoever accesses our data derive some benefit, we as the incumbents need to derive some benefits as well. I think it's a very tricky conversation to have, and like Douglas said, I think there's still quite a lot more that needs to be discussed. I think it's something you're not going to be able to get away from it, and it should be on anyone's radar, especially as you start looking at the commercial model for data sharing.
Thank you. I'm conscious of the time. We only have 1 minute left. So first of all, I want to thank you all panelists for this engaging discussion. I want to let everyone know that obviously this webinar has been recorded, so you'll get a recording, but just a couple of points to sum up what I heard today. On the point about financial inclusion, because that was obviously the headline of the event, sounds to me that open banking is already happening in emerging markets. And there is already some experience there. For example, Diogo in Brazil, and obviously Comfort in South Africa. And there's some other ones we didn't mention today, but you can find out more about them in our paper. And that maybe financial inclusion doesn't have to be the main objective, but if you design it in the right way, we believe at CGAP, and I believe that the panelists would agree with me, that open banking can support financial inclusion. And some of the more technical points, for example, on data protection, there are going to be some minimum requirements that need to be put in place, but you shouldn't be put off by the lack of a data protection law. There are other solutions, and what it is really is making sure that the ecosystem is well supervised and fit and proper, as Douglas had pointed out. And then as a question I think that a lot of regulators are asking themselves is, should this be mandatory or not? From what I hear from this panel today, I think you need to put a line in the sand, and that mandatory may be required to make the regime workable at one point. At least we haven't been able to discuss today any questions or any examples of voluntary, but I guess we could open that for another discussion. I guess I think that would probably round it up. I think we have one more slide, and it's just to set out what are the resources that CGAP has on this topic. We have a working paper that we published in October that handles some of the questions that were probably raised in the chat that we weren't able to discuss today. A couple of blogs. There was a webinar that actually presented the paper back in November, and so you can find that as well. And obviously, we're very excited to see all the interaction and all the questions. And I think we're going to close. And thank you again, everyone, for your time. And I don't know if any of the panelists have a parting word they'd like to say.
No, just thanks for the opportunity, and I learned quite a lot from Diogo and Douglas. Thank you very much.
Thank you for the invitation. It was a great discussion, and hopefully it will help other regulators throughout the world. And if anyone wants to have a chat with us, we have an email I'll share with you. So it's openbanking.denor, it's DENOR @bcb.gov.br. So yeah, if any regulator wants to have a chat with us from Brazil, we are available. We will try to make the best with our tight agenda to make this meeting possible.
Yes, and on my part, I'd also like to thank all the organizers, the hosts, Ariadne, Stefan, co-panelists, Diogo, was nice seeing you again, and also Comfort, nice knowing you. And also especially all of you attendees who listen through and send in your questions, discussions. Greta also for not only the excellent introduction presentation, but also the comments during the chat. It was very nice engaging with you. And I'm sure looking forward to future opportunities to discuss this topic and other topics as the financial system changes. We regulators, of course, should discuss and coordinate and collaborate even more to ensure that this is of benefit to the societies we all work with. So thank you all very much.
Yeah, final word from my side. I also thank the three of you, Diogo, Comfort, Douglas. It was great. I thank all the panelists, all the attendants for the very active chat. And, you know, we keep record of that. If please feel free to reach out to us at CGAP if you want to discuss any of the points. And have a nice day, everybody.
Thank you,
Bye,
everybody.
everyone.
Bye-bye.
Thank you. Bye-bye.